That's exactly what we see throughout history. We see a combination of low prices and low interest rates, something that if you're well positioned to take advantage of, you can create legitimate multi-generational wealth for yourself if you participate intelligently and don't ever lose investor capital.
Hello everyone, my name is Jesse Vergali and I am coming at you from self-isolation. I hope everybody is dealing with this as best as they can. First of all, I would like to say thank you to all the first responders, medical personnel, any essential services that are basically keeping this world running right now. So thank you. I had a very good interview yesterday with a gentleman named Hunter Thompson. He is the host of the podcast called Cash Flow Connections. It's a real estate podcast that is very cool in that it focuses on a lot of the kind of economic environment as it pertains to real estate. And he kind of really gets into the weeds more so than most podcasts I've seen. We were talking basically about the coronavirus and how it's affecting real estate. Generally, kind of the discussion around what the effects will be in the next few months, interest rates, the economy itself. And since it was topical, I thought I'd kind of move it to the front of the line. One caveat I do want to say here is that there's a lot of, discussion and opinions on coronavirus, and I think there should be. And I think there's a lot of people thinking that anybody talking about their area of business, whether it's manufacturing, retail, real estate, that they are being callous in the sense that not everything is about money, not everything is about business, and that's absolutely true. I hope it doesn't come off that way because it's certainly not the intention. I think everybody's trying to cope with this differently, and for me, my love is real estate, and talking to other professionals about how they're handling it and how they're working with landlords and tenants to figure out a path forward, I think is it's important. Just that caveat there. So without further ado, my conversation with Hunter Thompson. You had a podcast, I believe, a week or two ago, just talking about a little bit of the impact, or what you see as the impact as it relates to real estate with the environment that we're in. I thought, listeners would love to hear a little bit about that and your current thoughts, because every day it seems like, we're getting new information.
I think that right now, it feels like for the last 5 years, every conversation that you've had with any investor, if it's been more than a 10-minute conversation, has been about when is the next correction going to be and how we're going to well position ourselves to take advantage of it. And what happens during this, because I've seen now 2 massive corrections, not that this is one yet, but I'm anticipating that it will be, everyone goes, oh my gosh, when is there going to be a buying opportunity? And then one happens and everyone goes, not like this. This is not what I meant. Because that's what it means to have an incredible buying opportunity. It means that your friends are struggling. It means that someone's going to lose their job. It means that there's going to be a lot of bankruptcies. It's carnage and destruction. Unfortunately, that's what widespread buying opportunities mean. Now, on the good end of that, there are some real estate asset classes which I believe are going to be incredibly well protected. In particular, self-storage, just by the nature of the fact that you're not even supposed to go to the asset class anyway, just to go twice, once to drop your stuff off, once to pick your stuff up. So when you're able to see the space with the wide lens, you can see that there's always an opportunity in real estate. There's a reason that real estate's created more millionaires than any other investment or any other vehicle. Now, real estate has also created bankruptcies. So how we move forward in these times is so critical. You would think that if we were all machines operating on a binary code, that those 2 things at the same time could never happen. But that's exactly what we see throughout history. We see a combination of low prices and low interest rates, something that if you're well positioned to take advantage of, and you've done some of the things that I outline in my book, you can create legitimate multi-generational wealth for yourself if you participate intelligently and don't ever lose investor capital.
We've talked about potentially lenders just keeping the spread for themselves, given the fact that you're going to have this decrease in the discount rate. And then lenders, in theory, people would say, well, that should be in lockstep. They should be giving me the 5-year fixed mortgage at that rate, or whatever it is. What do you think is going to play out there? And do you think, in fact, that the rates will come down commensurate with the Fed's policy of reducing rates? And I mean that at the bank level when they're actually lending capital.
I think that over the short term, there can be that delta there. But because we live in a largely capitalist society, supply and demand will dictate where those prices fall. And it's not just that all banks are going to just stick to it, right? The beauty of free markets, even though I kind of scoff when I use the word free market to describe our banking sector, there is enough competition in the marketplace so that prices will reflect a legitimate supply and demand component. So I do think that over the short term, you will see a delta. And then over the long term, as people compete against themselves, you'll bring that delta down basically to act in lockstep with all of those other metrics that you mentioned previously. Now, that doesn't mean that if you're refinancing now, that delta is not going to exist. It does. And most people, we don't care about the long term. We want to know, if I'm refinancing now, what am I going to get a good deal? If you have the opportunity, I would say wait and see how this plays out. That's, for me, my true answer for most of the questions about predicting the future. We're in a massive question mark right now. I'm not saying that this is the buying opportunity. As of the recording of this right now, it's a question mark. We actually haven't had our tenants even have to pay rent once yet. I'm looking at April 1st as a very important date, but perhaps May 1st is an even more important date. And, not to get ahead, but I think that the massive tailwind spiraled out of control that took place in 2008 because of the lack of liquidity, that's not what we're facing. Banks are extremely well capitalized comparatively. The problem is that in 2008, they didn't have a choice. They would say, we're willing to take a 70% haircut just to get some liquidity. I don't think we're facing that right now. We could, if we end up popping the corporate debt bubble, which could actually cause some liquidity challenges. But right now we're all on pause. And the big question is, how long is this going to last and what the implications will be once we come out the other end of it?
There has been a bifurcation somewhat in Canada between the commercial real estate industry and the residential real estate industry as it relates to the response to this crisis. Has it been the same in the US in the fact that any of the, I'm hesitant to say the word bailout, but any of the stimulus that has been put into the system to assist with tenants, landlords, lenders, has it been for both areas in real estate, or has there been that same bifurcation?
Important question. So when it comes to interest rates in the United States, you're seeing significant interest rate reduction in the space of residential. And so we're seeing all-time highs in terms of refinancing. We actually have all-time lows, unsurprisingly, in terms of interest rates. So people are taking advantage of all the equity that's been built up over the last 10 years or so, refinancing and locking in historically low rates. On the commercial side, that hasn't quite happened yet, which is kind of what I was talking about previously with the whole supply and demand thing. There's a tremendous demand for real estate debt, and that demand allows rates to be somewhat high. In terms of the policy, there's two components of this. One, yes, there have been some very widespread, what's the exact word, memorandums, moratoriums on evictions for people that are in some manner have been negatively impacted by Corona. From my perspective, 100% of everyone, and the judge is going to have to decide. And trust me, you're not going to want to be on the other end of that right now. So in effect, it's very challenging to evict right now. In effect, it's very challenging to foreclose right now on residential houses. Then on the commercial side of things, the government-sponsored entities, the Fannie Mae, Freddie Mac, they have forbearance programs, which are extremely long-winded for up to 3 months or up to 12 months, where if you have a government loan, you can forbear and not actually pay interest. That comes along with some additional requirements. Number one being that you most likely cannot evict someone for up to 12 months. So you're seeing a lot of flexibility being granted by these programs.
We have very blue collar tenants. My worry is that you have this, you give them 3, 4, 5 months to go without paying and not look down the road of the, they haven't talked about payment plans yet. They haven't said in our landlord tenant boards what is going to actually unfold. So now you have a tenant that's already sensitive to money in terms of being able to make their monthly payments. And now you're giving them 4 or 5 months potentially of payments to make. And I don't think we've kind of gone through how they're supposed to make those payments, or multiple payments paid back.
Yeah, it's really challenging. And you look at some of the statistics, I'm not as familiar with Canada, but there's a high percentage of people in the United States where they've got $400 in their bank account. And I think I've heard only one counter argument to that, which is that, oh no, people have credit cards and they can use those. It's like, that's not a reasonable answer at an 18% interest rate. So you have a really serious problem, and just extending that out by 4 months isn't going to solve that ability of lack of savings. Now, the whole thing ties in really nicely with this challenge with interest rates and the moral hazard associated with all that, because low interest rate environments incentivize that people do not want to save for a lot of reasons. One of which is that they can't make a return on their investment by saving. And another is which they understand that inflation is going to eat up expenses. And so they don't want to keep money around. They just want to buy things now. If you want to buy one tomato sauce now, in 5 years, you can buy half a tomato sauce. So they understand that. So it's a massive, massive challenge that we see working its way through the system.
Okay, thank you for watching. If you have any questions as it relates to the conversation I had with Hunter, please feel free to reach out, and please be safe out there. And I know we're going to get through this. We just have to work together. Thanks so much.